Hey everybody, welcome to Mortgage Today for Wednesday, November 13th, 2024, and oh, what a day it was. UMBS were up 35 basis points for once on the open. About time. S&P futures were up 10.5 points. Bonds are responding favorably this morning to just released CPI data despite the as-expected result. There are two possible reasons. Number one, the unrounded core monthly reading was 0.28. Yeah, that's in the world we're at. We're looking at unrounded numbers now. And then without the shelter component, CPI would be at the Fed's target or close enough at 2.1% year over year at the core level and well below the target for all items less shelter at 1.3% year over year. Core CPI month over month came in at 0.3 on a 0.3 forecast. It was 0.3 previously. Unrounded, like I said, it was 0.28. Core CPI year over year came in at 3.3 on a 3.3 forecast. It was 3.3 previously. Like we said, basically the core came in at 2.1, which is a good sign. The burden of proof remains on economic data to make the case for significant improvements in rates. In other words, don't expect any big sustained improvement without markedly weaker data and inflation. Additionally, volatility potential remains elevated surrounding the election trade. This is an asymptomatic risk environment that continues to heavily favor locking versus floating until further notice. This doesn't mean rates can't drop from here and there, but it doesn't mean there is currently any reason to show a downward trend. Bonds began the day in modestly weaker territory, but quickly rallied after CPI data. The rally was informative both in terms of the moderate size and high volume. It reinforced our assumption that inflation data was back on the menu as a big-ticket market mover after taking a distant backseat to the jobs report. The initial reaction was short-lived, though. Gains only stuck around for the shortest-term bonds. 10-year yields ended up moving higher by several basis points, while MBS maintained modest gains thanks to their shorter implied duration. Rationale is in short supply for the selling because there were no clear individual motivations. Instead, we are forced to point to a slew of Fed speeches that were collectively more hawkish. Beyond that, one might offer some conjecture about the anticipated fiscal impacts from various political developments, but the narrative is certainly a bit tired at this point. So UMBS closed the day up 15 basis points. Sure tried to give a lot back. That is down 23 basis points from the high on the day. It closed at 99, so closing at 99 on the graph, we are way below that 25-day and 100-day and 50-day moving averages, so they're not even worth really paying that much attention to. If anything, we're kind of looking at a trend line ceiling where it looks like we have some resistance right around 99.2, so we bounced into that today, and then it went back down, bounced into it yesterday, and then going back into November, it seems like things kept topping out right around that 99.2 mark. In other mortgage news, Rocket reported a $461 million quarter three loss. Despite losses due to MSR markdowns, the Rocket Company's parent, Rocket Companies Inc., the parent of Rocket Mortgage, generated $28.5 billion in origination volume in the third quarter, 28% higher year over year. That's less than the $39.5 billion in origination volume reported by competitor UWM. Additionally, Rocket had a GAAP net loss of $481 million, or 19 cents loss per diluted share, given by a $878 million loss in the change of the fair market value of their MSRs. But Rocket did acquire MSR portfolios totaling $311 million in quarter three. The Detroit-based lender generated its highest adjusted earnings in 2 years during the third quarter of 2024, with a total revenue of $647 million and adjusted revenue of $1.323 billion, and still couldn't make a profit.